This year's been a trying time for crypto investors. It's been dubbed the crypto winter and is marked by a stark decline in the prices of a lot of cryptocurrencies. Now, the situation's gotten even worse, to the point of the very concept of cryptocurrency being caught up in a polar vortex of sorts. We'll be discussing this in today's video. First up, cryptocurrency and the recession. This week has been a particularly hard period in the crypto winter that has long been building up. Crypto's always been a bit uncertain as a currency, and the myriad different coins have constantly fluctuated in value ever since Bitcoin hit the market. But the turbulence in the global economic and political landscapes over the past couple of years has really thrown the crypto market into disarray. Back in 2021, Bitcoin was sitting at its highest value ever, with a high of around $68,000 late into the year. However, this year has been unkind to the coin and others. What's worse is that this weekend might just have sped up the decline of cryptocurrency in general. Last weekend was a difficult moment for investors as the United States Central Bank hiked the interest rate of the market by 75 basis points. This understandably made everyone cautious of a potential incoming recession, and cryptocurrency investors took it as a sign to retreat from the market. Many began a mass sell-off of their crypto holdings, expecting an imminent drop in the price of many of the world's top-ranked cryptocurrencies. Next, we have the trends of Bitcoin. This month saw Bitcoin at its lowest point in the year, falling to about $18,000. However, it did recover slightly and went to about $20,000. That's still not much when you consider how high Bitcoin was riding just last year. This drop represents a shocking dip of about 74%, which is insane when you remember that it's been less than a year since that all-time high. Bitcoin survived the pandemic and even rose above it at times, but this year things just aren't working out for it. Bitcoin hasn't been this low since 2020, so all of its progress made in the past 2 years has just been erased in a matter of months. And now, experts chime in. A senior executive of one of the world's largest banks commented on the recent turn of events for cryptocurrencies as a whole. He was the man that actually stated that this crypto winter that's being further plagued by a polar vortex. In the past, crypto has risen above a number of winters, 3 in fact, as well as constant fluctuations in price. But this time is different. What gives? According to this crypto-savvy bank executive, part of the reason why crypto hasn't been able to weather this particular winter is because of how widespread the use of blockchain technology is now. Irfan Ahmed of State Street Digital in the Asia-Pacific region commented on the issue, saying that this is the first time cryptocurrency has actually had to brave an inflationary environment. This, coupled with the fact that cryptocurrency is seeing its highest investor numbers to date, is what has resulted in what industry professionals are calling the polar vortex. Despite the decline and turbulent environment, Ahmed thinks that major players in the market like Bitcoin and Ethereum will likely survive this, considering how widely used they are. However, he sees this winter as bringing with it a number of changes, resulting in the permanent evolution of the players and protocols that exist in the market. So, when will the winter end? The primary cause of the polar vortex plaguing the crypto market right now is clearly the rising interest rates of the American economy. Cryptocurrency, despite being a decentralized currency, is still quite closely connected to the traditional stock market, and as such, it's as responsive to interest rates as traditional market assets. Data analysis has shown that the USA's inflation rates had reached a new high of 6.8% back in May, which is the worst it's ever been since 1981. This has resulted in markets like the Dow Jones tanking, and as such, the cryptocurrency market is also suffering massive downward trends. The Scottish historian Neil Ferguson believes that if Bitcoin follows this pattern it has displayed in its history of about 13 years, we might be seeing a drop of about 83%, bringing the value down to about $11,000. However, Ferguson staunchly believes that Bitcoin will weather the storm, and this winter will be followed by a very successful spring, in which the currency will steadily advance to being dependable digital gold, unlike its continuous state of volatility so far. Entrepreneur David Marcus shared similar sentiments, stating that the currency will likely be around even as 20 years pass, constantly gaining relevance as time goes on. Considering that Google's Web3 will likely involve the use of the blockchain, it doesn't seem like crypto will be on its way out anytime soon. We'll just have to wait and see in what state it comes out of this winter, and how long, if at all, it will take to recover. Now, in other news, crypto exchanges go offline. Cloudflare is a web infrastructure platform that hosts a number of websites which also happen to include large crypto exchanges like FTX, Bitfinex, CoinMarketCap, and OKX. On the 22nd of June, the platform suffered a major severe outage that lasted about 25 minutes. You can imagine what happened. Users that tried to access any of the websites of crypto exchanges that are hosted on the platform were greeted by a 500 internal server error, which means that nothing on these exchange platforms could be accessed. As soon as the exchanges noticed the issue, they took to Twitter to alert and assuage users. In FTX's case, they still had some aspects of their service still active for users, stating in a tweet that their post-only mode was still running. What's interesting to note is that some exchanges weren't affected by the outage, with Binance still running while things got sorted out on Cloudflare's end. It seems a little suspicious, but the CEO of Binance clarified that their exchange had redundancies in place in case of such an incident. This isn't the first time Cloudflare has faced downtime like this. Back in August of 2020, the service suffered a similar incident, and a lot of exchanges on the platform like Bitfinex were affected even then. Many are hoping that Web3 might bring about the development of an alternative in the future that prevents such an incident that definitely takes a huge toll on the crypto market. Next up, FalconX, valued in the billions. FalconX is a digital asset platform that allows for crypto trading. The platform was recently valued at a ridiculous $8 billion in new funding round by Singapore's sovereign wealth fund, GIC and B Capital. This news comes in despite the harshest winter the crypto market has seen in its entire history. This new funding round has doubled the platform's valuation in just 10 months. The funding round raked in a total of $150 million from a number of different investors, old and new. Not all of this funding money will be going into the company's wallets though, as many investors have also chosen to sell an as of yet undisclosed stake in the platform. New investors include private equity firm Tiger Global Management, Thomas Bravo, and Wellington Management. The deal takes place just as FalconX looks to increase its workforce by about 30% in the coming months. According to the CEO of the platform, Raghu Yarlagadda, this turbulent environment in the crypto market at present makes this the perfect time for acquisitions. FalconX will be looking to use the newly attained funds for this, as well as bolstering their tech and data analytics departments. In addition to this, they'll also be looking to expand their services to institutions from trading execution, credit, and prime brokerage. This policy of acquisition may last well into the next year, as the CEO expects the crypto market's period of volatility to last anywhere between 12 and 18 months. Yarlagadda said that the major theme in the conversations with investors was the flight to value, as they aren't looking at growth and cost anymore. The focus is now on sustainable growth and profitability. The reason why investors are pouring money into FalconX is that despite the crypto winter, the platform has actually achieved a record number of users in the past year. And finally, Bill Gates speaks on blockchain. In the month of June, Bill Gates spoke about cryptocurrency and NFTs at a TechCrunch conference. According to him, the digital asset trends that everyone is chasing are based on the greater fool theory. What this means is that investors can make money on worthless assets based solely on the fact that others are willing to value them higher. He even joked about Bored Ape NFTs, sarcastically saying that these expensive digital images of monkeys are going to help the world greatly. For Bill Gates, old-fashioned investing is where it's at, valuing asset classes like farms with actual outputs or manufacturing companies. Perhaps he's just part of the old guard, refusing to adapt to a new economy. However, the fluctuating trends of crypto do lend his words some credence. That's a wrap for this video. Do you think cryptocurrencies will survive this winter? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.